Welcome to FinTech Frontiers 2025, where we explore the latest global innovations reshaping financial services. In this lecture by Dr. Microlearning, we'll cover breakthroughs from blockchain and digital payments to AI, RegTech, and InsurTech, and how these trends are rethinking trust, speed, and customer experience across markets. Think of this as a strategic overview of where FinTech is headed and why it matters. This slide explains banking as a service, where non-financial brands like retailers, telcos, and SaaS firms plug into BaaS APIs to offer white-label accounts, cards, and wallets that can launch in weeks. Agile fintechs supply compliance, rails, and ledger infrastructure, while legacy banks provide deposit share and trust, creating a competition model in which speed meets trust and every customer touchpoint can become a revenue moment. AI and machine learning are becoming the invisible infrastructure for finance, driving big efficiency gains like dramatic contract review time cuts and much better risk models. These engines power hyper-personalized robo-advice, real-time fraud scoring, and seamless customer journeys, affecting core sectors such as lending, payments, and wealth management by enabling faster decisions, lower defaults, and more tailored services at scale. Next-generation autonomous agents are transforming operations and customer engagement by executing complex tasks without constant human oversight. From automated credit underwriting and dynamic portfolio rebalancing to self-learning fraud patrols and 24/7 proactive financial coaching, these systems promise cost reductions, improved compliance, and always-on support, with analysts expecting significant pilot adoption of agentic systems across financial services in 2025. Institutional DeFi and regulated rails are bridging centralized finance and decentralized protocols by enabling institutional-grade liquidity, staking, and on-chain insurance. The regulated DeFi rails concept brings instant settlement, programmable, collateralized lending, and new interoperability between CeFi and DeFi, challenging traditional clearing models while providing banks and institutions with more flexible, composable infrastructure. Central bank digital currencies are moving to global pilots and launches, promising instant cross-border remittances, greater financial inclusion, and programmable subsidies for targeted government aid. As CBDCs scale, debates focus on balancing privacy safeguards, ensuring offline accessibility without internet, and achieving interoperability with existing payment rails and stablecoin networks to deliver practical, regulatory-friendly digital money. Cross-border payment orchestration is accelerating thanks to instant payment schemes and AI-driven routing. Transaction values are projected to surge, powered by regional hubs like FedNow, UPI, and Pix, while AI orchestration automatically maps merchants to optimal local rails, converts FX, and enforces compliance so SMEs and gig workers can benefit from one checkout flows and lower cross-border fees. Security and frictionless payments are converging through innovations like single-use virtual cards, dynamic CVV, and behavioral biometrics that replace static passwords. On the consumer side, NFC wearables and invisible card-free checkouts cut queue times and streamline experiences, while multi-commodal biometric scoring combines methods to reduce friction and improve transaction security, supporting both convenience and fraud prevention. AI-powered fraud detection uses real-time anomaly detection driven by keystroke rhythm, swipe pressure, and transaction metadata feeding self-learning models. These systems monitor and flag anomalies in milliseconds, and early adopters report roughly a 50% drop in fraud. At the same time, governance remains a focus, since many firms still lack formal AI security controls, and cyber resilience is becoming a strategic differentiator. FinTech security is shifting toward password-less, continuous trust, and zero-trust architectures that verify each access point. Biometrics, live behavior signals, and fingerprint or face recognition feed a continuous trust engine for seamless verification, while zero trust enforces per-transaction checks across employees, APIs and devices to shrink attack surfaces and counter evolving threats, including AI-driven ransomware. Robo-advisors are evolving from automated portfolio management toward lifetime financial health platforms expected to oversee trillions by 2025. Features like auto-budgeting, debt optimization, and community saving circles support inclusion and well-being, with real-world examples showing how fintechs boost access and lower costs, positioning robo-advisors as long-term partners that proactively guide users' financial lives. Green fintech and embedded ESG analytics let consumers and institutions measure carbon footprints, build climate impact portfolios, and earn sustainable spending rewards. Tools such as Footprint Insight and sustainability wallets enable firms to integrate ESG data, attract eco-conscious customers, open green bond markets, and meet disclosure mandates without extra burden, turning sustainability into both a risk metric and strategic growth opportunity.